Hello guys and welcome back to the channel. Today we're going to be covering a little bit of analysis on Bitcoin and Ethereum, and the big question that I kind of want to go over is, are we going to start to see a turnaround point? Is it going to continue to drop for Ethereum and Bitcoin, or is it actually going to reach to the next stepping area? And that's what we're going to cover right now. All right, so if you haven't already subscribed, drop a comment, support our channel, and while you're down there leaving a comment, let us know what you think. Click the bell icon and stay up to date with us when we release a new video. Bitcoin is trading around 26,845. It has settled in a bit of a range. Let's take a look. Okay, we're officially inside of a range, and it looks like it's going to continue this way for a little bit of a time. Now, we had this back, the same kind of range area right around the 23rd, let's say starting of the 17th of March. It continued to kind of build this, and of course, coming from the beginning of April, the first week, second week of April, we started to see a little bit of a pump, and then it retraced back down and so forth. But right now, you can see where the volume is also kind of low. Now, this gives two major points to pay attention to. With the volume being low, we're inside of a range, right? We don't have much, and I just want to clear this out for a second because it's in my way. All right, so what we want is we want to see some momentum candles moving in a positive note. If you're trading inside, if you're going in long positions, if you're trading in shorts, it's a very tricky moment. So if we're paying attention to the support and the resistance lines being here and here, and I'm going to just move these up so you can see them. Uh, we can probably safely call 27,000 a resistance line at this point, and we can call 26 and a half around a support line. Moving into this is going to be, and I don't have the Fibonacci scale right here. I just don't find it really very needed because it's such a volatile moment. The next moment that we're going to see, if it continues to go up, at some point, we need to see it do something a little bit different, right? So, for example, if it comes up here and it touches this line, we're going to have another moment where it's we're going to have that pushback and coming down. So if you go long right here, you're a good chance that you're not really going to make enough cash before you get liquidated into the stop losses. The same thing is going to apply if we try to go short. You have a moment to go short right here. And then that moment for the next, if it, for example, if it hits and it starts building back up here and bouncing back up, we're going to have that point where it can be also liquidated. So what do we do? Where's the bias point to this moment? Where should we really kind of be biased? If we're looking back again, back in February, we can see we have that market structure that we're always talking about. As we're coming here, it's a good chance that we're going to push further down. And why I'm saying I think we're going to potentially come right back down to the 24,000, 25,000 mark is being because of these structures. Now, of course, looking in the last couple of months, it doesn't look so much, but as we look further back, we have those key moments. You can see we spoke about this before, back in August, that major market move. And it's when I remember, if you catch me, if you're following along with the channel, these major market moves like this one, and I mean we can really honestly call it as such, right? These market moves, and we're not talking about these, but we're talking about the next level of support. We have these moments to pay attention to if we're going statistically. And I mean, and even furthermore, when we're talking back in 2020, it even comes in. I like the rule of three. I always go by the rule of three. So, being that these are some major points on the market, and just kind of like take a look, right? Major points right here. Again, major points right where it kind of came down. The rule of three being if it touches these points or there's three major structures at that moment, that's enough to add it inside of a is a point knowing that it will more than likely, because history repeated itself, that it's going to come back to that point. Now, what I've noticed, it always does. It always comes back to that point, which we talked about before. the same back here, the same in here, right? It reached these levels at one point. Again, major structures, not little small structures here that you can't really, because it'll just make you confused. So in general, it will probably, more than likely, how I call it, or how I'm seeing it, it will touch back down to 25. There's just a bigger chance that it can do so. And that's something that I'm going to pay attention and watch right now. So am I going to go on a very uh, big area and say, oh, well, hey, it's going to jump up, or hey, it's absolutely going to crash? No, right? I'm not going to say that. Now, back here, we were speaking as well, and I'm just going to try to drag it here. You can see we had a trend line that was going down, and we broke past that, and it went up majorly, majorly back in January. We spoke about this. It broke past and it moved, but you can see it always touches back in these major areas, and so this is what to watch for. So when we're paying attention to what's going on now, right, with inside of the range, because when we have a range and low volume, it's getting ready for a big market move, always too. So it's always back. The same right here, it dropped and came and also dropped, kind of a little fake out and then come up, right? But it still moved inside the range. So what are we getting? We have our low volume. We have our three major market structures to pay attention to. We have a small area of growth between the next support and resistance. And I can tell you the next, if it decides to reverse, gets tired, and it starts to go down, right, that's going to be the moment to pay attention to right here. So if it comes back to 24,000, that's going to be the next level. So if you go short, if you have a short bias, good moment. All right, this of course this is the daily altogether, and don't worry, we'll cover a little later more into the 4 hour marks. But I'm pretty much a day trader when it comes to uh, some big moments. All right, now Ethereum trading at 1,809. Excuse me. All right, here I have my Fibonacci. Also, very big area where it's going to stay. This is old. This is from previous videos recovered, but I didn't have to move it. You can see we're still kind of floating around on the support level. The same thing. Nothing's really changed on this when we look at the price or the movement or the patterns. The same thing over the last 3 weeks. We've had a rather normal decline in volume. Now we had this swing, this kind of swing, this jump automatically, which showed it was really volatile and was going to go down. That was a big warning. We had the level up here, which we reached, right, which was kind of what we wanted, right? But even this area right here, we touched for briefly, but nothing that really confirmed. But being that we've seen this candle, it was a big moment to leave out, right? So either way, the range is moving as well. The next level of, yeah, and I need to draw some more lines. The next level of resistance is going to be around 1700. Again, back to market structure, big swings, market structure. And honestly, even if you don't call it as such, if we kind of give it just a little bit more of an area, like these areas right here, an area, not just a line, right? Let's call it this. We have some market structures. This major dip, and just get my brush. Sorry, I don't use hotkeys too much. So major structure down here, right? That major drop, major incline, also major structure, right? Touching here, touching here. And when we go back, I guess we can count this one as well. Um, right around in this area, but not quite like Bitcoin, but there is two, and it's enough to give you a little bit of a warning. So it can also drop down. I mean, from what, say $1,700 to 800 is not much. It's $100 difference. That's very easy to do from how it reached at that top back on the 6th, and it dropped back down to 1788. I mean, you can kind of see the point. Will it continue to drop? I think so. And if it does start to climb, that possibility of climbing in is going to come probably before we reach up here. It's going to be about right there before we reach in this moment. And we will reach this moment again. If we have this market structure, it will come back to 2000. Do I think it's right now? It's a possibility. But I think more so it's going to, because we don't have those upper areas for structures. So I think 1700 is going to be more of a possibility than what anything higher would be at this moment before we touch 2000. Now we need 2000, but it's just not going to be there for a little bit of time. So I think we'll touch briefly 1,700 bucks, and then eventually we'll climb back to the 2,000 mark because we have our 1 mark, our 2 here as well, and our 3 right here. We can count now, not going too deep, but just showing. But either way, we're getting ready to remove. The volume's low, the volume's low, the volume's crawling, and it will shoot. I believe it will shoot, especially with Bitcoin. Bitcoin will jump as well. We have some positive news in Bitcoin. So again, 1,700 bucks, it will continue to fall down and then come up. And the momentum for the selling is way stronger, and it's been so from from the 11th right until today, right, being the 22nd. So you can see where that's going. All right. Looking at the market all in all for the day, Sol is down by 2.7%, Bitcoin's down 1, Ethereum's down 0.3%, XRP 1.6% in the red, Matic's down 2.6, everything's pretty down. Litecoin is down 1.6, AVAX is 1.7 as well. Doge is also down by 2.6. So all of these are down quite a bit. Of course, they're going to be down. They're not really going to jump super big. But if we look at the market cap for the week, if you're looking at the performers, XRP is up by 7.6. Right now, it's kind of early to call, really. If you're talking about the daily, I mean, going back and forth, the daily and the week. This is a good thing to always compare what the statistics are for the week and the daily, and kind of do a range of what that's about, right? So XRP's up by 7.6%. It's actually a pretty good performer for the week. Probably one of the most performing besides TRX, which is really good. Uh, Matic's down 1.6 for the week. Expect the Bitcoin, Ethereum kind of the same. Binance is also 2.2. AVAX 5.1 down for the week. OKB is down by 0.3% for the week, but pay attention to that one. OKB is also in the news quite a bit. So watch this one as well in the week. And we have also, let's take a look. ApeCoin is also up for the week, so pretty good. So when you compare by the daily, it looks pretty gloomy, but all in all, they're doing pretty good for the week. So TRX is actually performing quite well. So pay attention to that. And Solana, when you compare, is not too bad when we look at it for the week. Just the daily looks pretty bad, but we'll cover some of those later on, such as Sol, AVAX, and TRX, probably in our next video. Thank you guys for watching. I will see you again, and be sure to subscribe to our channel. Thank you.